Welcome to the Forever Cash Life Real Estate Investing Podcast with your hosts, Jack and Michelle Bosch. Together, let's uncover the secrets to building true wealth through real estate and living a purpose-driven life.
Welcome to another Winning Wednesday. Welcome to another episode of our Forever Cash Life podcast, which, by the way, we're going to rename this very soon in the next few weeks to become the Land Profit Generator podcast. So I just want to let you know. So that's coming up. And today it's time to do a State of the Union in real estate, and particularly in land flipping address. Okay, so with that said, let's get going. So first of all, we had a wonderful time in our virtual live event just like a week or so ago. It was, or actually just a few days ago, and it was absolutely wonderful. Everyone had such great energy. So if you can check when the next one of those is, or when the next event is actually coming up in form of a masterclass. It's a 5-day masterclass where we're going to bring you all the way again from the beginning all the way to mastering land flipping over the course of 5 days. It's completely free, and you can register for it under landprofitmaster.com. Again, www.landprofitmaster.com. Just go there and register, and we'll talk to you about how to set up your land business, what land flipping is, how to set it up, how to accelerate it, how to get it to mastery, how to do this from home virtually without virtually any competition, because land flipping is still the number one area in real estate that is last remaining, where there's almost no competition, where very, very few people are operating compared to the masses that are trying to get those houses, right? What I'm going to cover today is, again, the State of the Union address. So how does real estate look like right now? Right, we're in the end of winter of 2021. We're at going into the spring of 2021. We have now officially been pretty much 1 year with COVID. Right, about 1 year minus a week or two, we have is when basically the entire United States shut down. Even a few weeks before already, like in Italy, they were already shutting down and things like that. And the US took a little longer, and then the shutdown, and then the world shut down. Right. So we're in the middle, pretty much 1 year into this. It looks like the immunization is proceeding slower than expected, but it's proceeding. It looks like the United States is actually not slower than other countries. It's looking like they're faster than other countries. And whether you believe or not, it works or doesn't play a role right now. It will have an impact on how the countries open. Will have an impact on all these different things. Also, I just read an article in the Wall Street Journal talking about that, an opinion article by a medical professor from one of the top universities in the world. University professor of medicine. And if you have Wall Street Journal access, go look at it. He expected we hit herd immunity in the United States sometime in April or May of this year, because of the combination of estimated 40 to 50% of the United States has already seen the virus. So the bodies of people, wherever they go test a larger amounts of people randomly, irrespective of whether they have actually tested and reported that they had COVID or not. It turns out that right now, about across the United States, 40 to 50% of the people in the country already have been exposed to the virus and have built antibodies to it. So that, combined with the vaccination and all the things, he says should get us into herd immunity by about April or May of this year. Now that would be fantastic. So if that indeed happens, what we should see is the number of infections going down massively. What we should see is that allows many states to open back up, and that gets my transition into real estate right now, and that obviously has an impact on the economy. What it means is that the restrictions going to get lowered. People are going to go back into their offices potentially. People are going to go be able to move around in traffic again, move around in airplanes around, travel, and potentially sometime in the summer, hopefully sooner than later. It means that the relationship between different nations are easing up again, and you can go travel around the world again, which obviously is something Michelle and I and our family loves doing. Now, what does it have to do with real estate? Well, what it has to do with real estate is a lot. Because real estate, particularly if we start with the housing world, there's people living in those houses. And people living in those houses, in the vast majority, cannot pay, are not owning these houses free and clear. In the vast majority, they have mortgages on these houses. And therefore, if they have to pay monthly payments, they can only make those monthly payments if they have jobs. Now they only have jobs if the economy is open, and they only get paid for their jobs if they can get to work and so on and so forth. So this COVID kind of thing, which is obviously the number one biggest elephant in the room affecting the world here over the last 12 months, is therefore a key factor in the recovery of real estate, in the ability of people paying their monthly payment and so on. Now, at the same time, so with that said, if what this university professor who wrote the article in the Wall Street Journal has said, then we have a very good likelihood that we're getting back to like an halfway normal working economy that actually has some catch up to do in terms of manufacturing, particularly, and those kind of things. So we could actually hit a probably short-term 1 year, 2 year kind of boom, and I don't want to say anything beyond that, right? So, but we could hit probably a boom in terms of particularly manufacturing, blue-collar workers, and apparently based on another article I read in the Wall Street Journal, that's already happening. Right, it's already happening, and it's happening also because of the stimulus money. It's happening because of the increased unemployment money. It's happening because of the foreclosure moratorium that's still active, right? And it's happening because of an outlook of another big stimulus coming in, the $1.9 trillion stimulus that comes in potentially over the next few weeks, where everyone gets another $1,400 send in the mail or deposit in their bank account. So bottom line, there's going to be a bunch of money coming into the market, and if that is combined with an easement of the restrictions, it's combined with a reduction in the amount of COVID that's happening, with an opening of the economy, what it truly means is could be a floodgate of money coming into the market, and that obviously could potentially have some inflationary pressures. But what it also means, it's actually good because at the same time, Jeremy Powell, the president of the Federal Reserve, basically just said yesterday that any kind of increases interest rates are long gone, long out in the future. So nothing's going to happen very quickly here. So we're looking at probably at least another year, potentially more in low interest rates that we're having right now. So with low interest rates comes a lot of continuous refinances, right? Because everyone has a job, people that get their job back in, well, guess what? When you refinance your house, you only need to show the lender about 2-3 months worth of pay stubs. So if you have a job and you have 2-3 months worth of pay stub and you have the down payment, then you can buy a house, or you can refinance at a lower rate. So refinance is going to continue to go on. That means that their demand for houses is going to continue to be really high. And that, in my opinion, what it also will do, there's a lot of word out there that one out of 5 mortgages out there are delinquent. Well, what that means, I believe, is that if this continues on, that demand for housing is high because people getting their jobs back and so on. Some people are going to be able to catch up on their payments that they're behind, but a lot of people are going to probably have to sell their house in order to sell their house instead of going into foreclosure, because somebody hasn't paid their $1,200 mortgage for 8 months. That's $10,000 now. Right? They won't be able to come up with $10,000 and pay it. But because of the low interest rate and the boost of real estate that has happened over the last year, most house prices have gone up by $30,000 or $50,000 or even $100,000 in the same time period. So a lot of these house sellers are going to be able to get on the market, sell those houses, and actually walk away from their house instead of with a destroyed credit and foreclosure on their credit. I believe they're going to be able to walk away from that house with actually more money in their bank, and then they're going to go rent for a while, and potentially, and once they're back up on their feet, they're going to be able to buy a new house, as long as interest rates are still down, because the monthly payments are not. Or they're going to be able to refinance out of these things. And I think a lot of people that are potentially delinquent right now on their mortgages are able to do that. They're able to refinance out of their mortgage and into a mortgage that has a lower payment, and tack on and pay off the old mortgage that potentially is delinquent a little bit, and so on. So with that said, I personally do not expect a real estate crash, because the prices have increased so much above what they were just a year ago in most markets of the United States, that people can either sell out of their houses and sell out of their delinquent situation, or refinance out of their houses and refinance out of that situation. So with that said, we're going to have more. What that means for rental market is going to get actually more positive pressure, and rental rates will probably continue to go up, particularly in those areas where people move towards, right? San Francisco, they're moving out of, right? Chicago, they're moving out of. New York, they're moving out of, because also COVID has brought with it a training effort, a training effect. It has led to people that it has led to the situation that that a lot of people have that have kind of learned and internalized right now, that they don't want to be close to other people. So as a result, they have learned and internalized that they don't want to live on the 27th floor of a high-rise in New York City, or walk the streets of New York City where everyone is like full of germs everywhere. And not like they're in New York City, they're full of germs everywhere. Human beings are full of germs, right? But they don't want to go walk down the street where there's 10,000 other people walking. Instead, they're moving out, they're moving to the suburbs, and that's a trend that I believe will continue to be there. Now, what does it mean for land flipping? What it means for land flipping is that we are on a continuous trajectory for awesomeness. That means if the house market doesn't completely crash, which I don't foresee at all, based on what I just said, if the job market starts getting a lot of more traction, which is already happening, particularly in manufacturing, there's a shortage of labor. There's a backlog of producing things. There is, because they ran at half capacity for so long that they're out of inventory. They're out of things. There's stuff that is short, that is in demand, but there's in short supply. There's not enough supply on there. So then also when the stores open up and things like that, people are going to go back to the stores, and the restaurants open up in full capacity, and people trust that, probably it's not going to be overnight, but as people trust the newfound freedom, they're going to get back out, because they do enjoy going out for dinner. They do enjoy seeing each other. And so I think there's going to be, there's a big boost to the economy coming, at least short and midterm, for probably a couple of years. So with that said, what that means is that people will have money again. Also, the extra stimulus will flood money in there. And what we've seen that people have used for that money for in the past is they have actually gone and used that to actually pay off, make some investments, right? They've used that to make some investments in the world here, and they've made some investments in the world, and part of the investment is to actually buy themselves that piece of land that down the road they can retire on. Buy themselves that 10 or 20 or 40 acre parcel that they can go take the RV that they bought during the pandemic, or that they rented during the pandemic, go buy that thing and go spend their weekends out there. That they go buy some land in the outskirts of town where cities continue to grow, because the growth that for many years now went into the infill lots and into the center of the city, now I think is going to continue to be balanced out with the outside of the towns, because people want space. Like, it's not the fact that people can work online from anywhere in the world is not going to go away. It has been established for a full year. People that only were used to dealing with in person meetings, I have realized that they can do the same or more business remotely, right? So the traffic industry, the travel industry, the airline industry will be suffering probably for a while longer, right? So but the hotel industry will probably suffer for a while longer. But at the same time, the work industry is probably going to, the people are in the real estate industry should not be suffering, because the people realize that, hey, I don't have to live 5 miles away from my office, so I don't have an hour-long commute. I can live in the outskirts of town. I can afford a lot that is 3 times the size to then build my dream home on there, and then just commute in an hour into town, or hour and a half into my office once a week, because for the next several years, it doesn't look like I will have to go full time in there, because I can communicate with my team through virtual. I can communicate with my customers virtually. I can communicate to everyone that I really want to communicate with through these measures. So again, if I'm looking at it as a State of the Union, I'm seeing that we are going to have the next year, 2 years is going to be awesome for, I believe, for land flipping. I believe it's going to be good for house flipping. I don't foresee a crash in house flipping or in house values, because there's so many people are tax delinquent. Now, some people are going to lose their houses. But I think as long as the interest rates are low, and as long as there's a big demand from people wanting to buy these houses, and the economy is doing better, and that's what I foresee, that in 2009 what happens is that people lost their houses, and we went into a deep depression, or actually I call it a recession, but it essentially was a depression that was just propped up by artificial funding from the Fed, right? So it was called the big recession. But we went into, both events happened in parallel, right? And because of that, it took multiple years to come out. Right now, we have a mortgage delinquency situation in the housing world, but it's being paired up with an economy that's coming up. And in that scenario, one will buffer the other, right? One will buffer the other. Yes, if some people are going to lose their houses, but also a lot of them, because interest rates are so low and people are getting jobs back, and and the economy is going to start booming again in order to catch up with a missed year, like with the last year that we've had right now in economic production. There's going to be a lot of opportunities for people to get out of their houses to refinancing or to just selling, because the market has accelerated so much over the last year. So I think that's going to neutralize each other out, which means we're going to basically seeing a somewhat stable real estate market for house flips. And what that means, the economic boom and the economic recovery, is that people are going to have money, but they haven't forgotten the lessons of COVID. COVID did not just last a week, right? 9/11 was an external factor, like planes attacking, terrorists attacking the United States. It put a factor on the United States of paralysis, but it was a factor that was only temporary. The moment really everyone realized there's no more additional attacks coming, within weeks, everything went back to more or less normal in economic production. Of course, the people who were affected in New York did not go to normal. They were traumatized and they lost their loved ones and all these kind of horrible things. But I'm talking on a macroeconomic level from the United States point of view. The people that were, most of the country was in shock, but then very quickly recovered, and airline flights picked up again, and travel picked up, and then the economy picked up again. Right now, this is different. We went to a year worth of suffering. We went to a year worth of restrictions and wearing masks and all this kind of stuff. And that's going to have a bigger impact on people's behavior. So they have not yet forgotten. They will not forget this very soon, probably for years, the impact that COVID has made, assuming COVID goes away by summer, as this one university professor, a medical research professor from a top university has just posted on the Wall Street Journal. So if he's right, we have an open economy perhaps this summer. We have, most states can pare everything back, and we're going back to a somewhat new normal, whatever they may look like. But what we're seeing is that people have not forgotten. So that the trend to have land, the trend to have space, the trend to want space, the trend to be away from other people, the trend to buy our three favorite properties, which is infill lots because housing demand is great, which is properties in the outskirts of town, which is going to be continuing huge demand, in the large acreage where they can escape for the weekend is going to be in massive large demand. So that's my forecast for the year. So it's a positive forecast based on my assumption that COVID is going to, if not go away, then really massively the impact massively reduced. And I personally agree with the gentleman that wrote with a doctor with a PhD, the university professor, medical doctor, that COVID basically just going to become over time just one of the factors of what we just faced with every year, and but we have, it looks like we are reaching this what's called this herd immunity. If what he says is correct, And I believe he made a very, very good case about that. So with that said, guys, that's what we have here. So that's my State of the Union address. So what that means is that you do not want to wait. Like right now is the time. The best time to get started was obviously a few years ago. The second best time to get started is right now, because land flipping is not dipping. Land flipping is on fire. Land is sexy again. Real estate is sexy, and it doesn't look like it's going away, right? So with that said, go jump in right now and get the subject of money removed from your life once and for all for the rest of your life. Do it now and do it quickly. So with that said, again, register for a masterclass coming up on March 15th. We're going to start it for 5 days, 5-day masterclass. Register on landprofitmaster.com, and I will see you there, and I will see you also in the group here. All right, with that said, bye-bye, everyone.
Enjoyed this episode? Then make sure you like, subscribe, and post your comments and questions below the video. We're looking forward to hearing from you.